When you said at the beginning of the interview that you would advise a business owner, are you actually finding that in the marketplace that there's not a realistic expectation generally, either in terms of value or in terms of these sorts of issues actually being discussed up front with owners? Are you finding that
Yeah,
generally?
I mean, that's a big problem with other business brokers. They are completely unrealistic as to what the value of the business is. And they have, in fact, I've seen almost fraudulent valuations. Fraudulent, completely fraudulent. I'm not even saying inaccurate. I'm saying fraudulent valuations being given to business owners. And it's completely, I mean, I would love to be in the position where we're Apple and we're buying businesses of those dollar, billion-pound sizes, but we're not there. We're in the small business market, small to medium-sized business market, and the small to medium-sized business market. There's a certain value cap that you have, unfortunately, and that's what it is. So, whatever that may be, we look at obviously the last 3 to 5 year financials, and it's based on those numbers while taking out and putting in. So, for example, one thing we find a lot of business owners, they are paying things from their personal accounts and not running it through the business. They need to be moved into the business. Okay. And there's certain things that they're paying from their for their personal purposes from the business, and they need to be moved out of the business. And either way, that moves the valuation up and down, sometimes in the business owner's favor, and sometimes not in the business owner's favor, because the profitability has now been reduced because of that.
Yeah.
And it's all based on your turnover and profitability. And again, there's many factors. You said 8 key drivers of value, and there are multiple drivers of value. But having a realistic expectation is really, really important of what can be achieved. And also, which is extremely important, because with any investment, and don't forget from an acquirer's perspective, it's an investment. Any investment is a risk. So there's a risk valuation that needs to be made too. So the structure of a deal is really important for us. And not just us, any acquirer who is generally buying a business with less than 10 million pounds revenue, there's a higher risk. So, if you're a business owner and your business has more than 10 million pounds of revenue, then the risk starts getting lower. But if your business has got less than 10 million pounds of revenue, the risk is always higher. And therefore, the structure of the deal is really important to ensure that risk is mitigated. And also, as an acquirer, it shows me that you have confidence in your own business too.
Yeah.
Because if you have confidence in your business, then you'll be willing to have a deal structure which works for both parties, both the acquirer and both the seller too.
Yeah, because and that's a very key point, actually, the structure of the deal, because again, we have a something called a personal readiness to exit score, which is an online questionnaire, and it makes them aware of the potential types of deals that they have if they go to market, and there needs to be a clear understanding before they go to market of what to expect. I mean, I found that generally clients that have used other agents, they've had an over expectation of their business, an over expectation of how easy it might be to sell, no idea of a structure of a deal, no idea of a proper preparation towards getting that business on the market, and no documentation to back up a value. So these is frustrations that you've all kind of discussed with me.
Yeah, and that's why I was saying completely fraudulent valuations, because none of these things have been looked at.
Yeah.
How can you? I remember I spoke to a business broker, and he gave me a valuation of a business, and I said, "Have you seen the financials of the business?" He said, "No, I just spoke to the owner."
Wow.
I could not believe. I was actually dumbfounded, and for about 5 seconds, I was silent on the phone because I didn't know what to say.
Wow.
So, yeah, exactly. So unfortunately, that's the case. But coming back, at the end of the day, we want to be practical with every single business owner.
Generally, I understand, like you, the parameters of evaluation, and I always look at the business from the view of an acquirer, and just make sure that we have something that stacks up when we present it to you. Have you found that to be the case?
Oh yeah, I would say that Zach, and I'm not just saying this because we're on the Zoom together. Zach is one of the most practical business brokers on the market. So we've dealt with all of the business brokers that deal in the industry of the hair and beauty industry. and there are some good ones and there are some very, very bad ones, you know. And Zach is definitely on the very, very good side, I would say. So if you want a deal which is practical, something that can be taken to completion, then Zach is, you know, he's a person.
Yeah, because you know, there is actually only a strict band within which a deal can be done, you know, that suits a buyer and a seller, and it's about understanding where that area lies, I think, and I try and identify that, so everything kind of reflects that. So we're not spending hours on end arguing about valuations, etc., etc. It's a nitty gritty we get down to almost immediately.
Yeah, and just from our perspective, we have a certain, or we have markers of valuations too. So, for example, you know, if we know that the owner is heavily involved in the business, then we're only willing to pay X amount or X multiples. And then if the business is, the owner is not involved in the, you know, customer delivery or the delivery of services, you know, cutting services or treatments, whatever it may be, especially color, then, you know, there's only a certain amount that we're willing to pay. And then, sorry, if they're not involved in that, then we're willing to pay maybe a little bit more because we know the risk is mitigated, or maybe even not a little bit more. We're willing to pay, you know, more in favor of the sellers. And then if the, you know, the seller is not involved in the day-to-day at all, then that's absolutely fantastic. That's the kind of deal we're looking for that will snap up very, very quickly.
Okay, and just going back to the valuations, when you found a really good business in the past, and it's with an agent who really hasn't sort of taken the time properly to do a valuation, and you know, it's a business you may want to buy, but the valuation is so inflated. I mean, I guess frustratingly, there's no deal there because of the client's expectations.
Yeah, I mean, to be perfectly honest, I receive deals in my inbox and by phone on a weekly basis, maybe about 10 deals a week, and you know, I'm rejecting all 10 of them. And in a month, I may say, okay, this is one that we can, you know, move forward on. Send me the accounts. And this is another thing, you know, unfortunately, this is something which is not just in the hair industry or the beauty industry. It's with every single small business, is that generally they're doing the accounts to minimize tax and therefore profitability is low. And, you know, there's no deal there too. But we're rejecting more businesses than we accept purely because there's unrealistic valuations. If the valuation is too high, then there's just no deal there in the first place.
Yeah.
And no, I mean, you know, private equity or a strategic acquirer, number one, they won't even purchase anything which is less than 5 million in total revenue, in total turnover. But number two, if they do, then they're really, you know, looking deep into the due diligence and everything, and most of the time they don't go ahead with the deals. So, well, they will pay higher. They will pay higher. That's what I was getting to. They will pay a higher valuation, but you have to be that certain size.
Yeah.
And if you are that certain size, to be perfectly honest, as of the date of the 1st of March 2023, which is today's date, we're not looking to acquire you now. You know, maybe in 2024 we're looking to acquire you.
Okay, and I just wanted to touch on a couple of other things as well. I mean, I now think that people like yourself, I call you armchair buyers, basically.
Armchair buyers, yeah.
What I actually mean by that is that, you know, you need to have proper information in front of you, you know, immediately, not having to kind of a very vague kind of description on the internet that you then have to proactively chase. In my view now, we have what's called an armchair buyer, and they need all the information in front of them to see the deal. So, for example, we do the company valuation. We even do a video. We also have an open sale in all situations. So when you buy that business, you already know the staff have been informed. So it makes the whole process a lot easier. So that's what I mean by an armchair buyer. And I think that's a big difference between the way we do things and the others, that, you know, you're going to be able to receive a sales memorandum from me, and you're going to be able to know almost immediately yes or no, which is where you want to be. Is that right?
There's two things I want to touch here. I want to mention the staff members first because it's so important for both sellers and buyers too. As you know, in the hair and beauty industry and any industry, unless you've got an online business which has a lot of systems in place, staff is the key. Without staff, there's no business. Okay, if you don't have staff behind the chairs cutting, if you don't have staff next to the beds, you know, providing the services in the beauty industry, then there is no business, because you have to have staff to be able to provide the services. And it's really important for us that staff are comfortable. There's no way that staff members, one day they think they're owned by one, and the next day there's a new owner and they have no clue as to what happened, that they will feel comfortable in that situation. Even when staff know from a year before that the business is on sale, they are still uncomfortable. Yes. Yeah. I used to work for businesses when I was younger that were acquired or went through change of ownership. Big businesses. The biggest business that I used to work for that went through a merger actually was Orange Telecoms, when they merged with, I think it was T-Mobile or something, and they turned to EE. Yeah. And that was even uneasy for such a big business. Such a big business. It was uneasy at that time. I can't remember, there was about 1,500 people that got fired. So we're all thinking, okay, are we going to get fired? Is our job safe? One thing I will say is that 100% of the time, everyone's jobs are safe when we acquire a business. Unless, for example, you as a seller are telling me that we need to get rid of that person. Yeah. Then I'll say, okay, let's get rid of them, because if you're telling me we need to get rid of them, then we'll get rid of them. Otherwise, no. Everyone's jobs are safe. We want to, in fact, we want to promote. Many times we promote from within. Yes. So the last deal that we done, we just promoted 2 people in the business, and they're getting a pay rise because of that. And yes, more responsibility, but they're getting a pay rise because of that too.
Okay, and
sorry, you mentioned the other thing, right? What was the other thing you mentioned?
About the way the stuff items are presented to you, the video.
Oh yeah, armchair value. Yeah, without a doubt. I mean, there's sometimes there's too much information, and sometimes there's so I learn a lot of my business acquisition skills from 2 very, very successful people, Warren Buffett and Charlie Munger. So these 2 guys, obviously, as we know, they're some of the biggest business owners in the world. In fact, they have the biggest private equity business acquisition company in the world. And Warren Buffett is, of course, one of the richest people in the world, and he has been for the last 3 decades. They do business really, really differently to private equity, but they're still way bigger than all of them. They want to understand the USP of the business, the unique selling point of the business. They want to understand that the business works, even if that seller is there or not. And they want to understand that all of the things are in place. So is the lease watertight, for example, in this industry is really important. Yes. Is the lease watertight? Now, those guys are acquiring businesses in their billions, so they don't even have a problem of checking the leases, but we have to, because it's a much smaller business, and we have to ensure that that is in place. And many times, I would say, 8 times out of 10, there's work needs to be done on the lease. So we need to check certain information, and if that information is provided to us from day one, we can make a decision very, very quickly. So it doesn't waste anyone's time. Because if you're a seller, and let's say we've approached you and we said, okay, we want to buy your business, and then we have to spend the next 3 months just chasing after very basic information, you're thinking there's a deal on the line, and then after 3 months we say no, because after all of that information has been provided, we've just wasted 3 months of each other's time. Yeah. And it's more frustrating for the seller than it is for the buyer, because we've got other opportunities. But you as a seller, you've only got your one business that you need to sell. Yeah. So you just wasted 3 months. And if that information is provided up front, the lease information is provided up front, the accounts are provided up front, the tax returns, even the business tax returns are provided up front, all of that information is provided up front, then within, I would say, maximum 2 to 3 weeks, we can make a decision whether we want to go ahead or not.
Brilliant. Because again, when I'm doing the valuation, I do a due diligence exercise on the business. So we've got a data room with staff contracts, supplier contracts, the whole thing, the accounts, VAT returns, etc. And as you say, very key to have all the information so you guys can very quickly get on with your job and decide whether you want to buy it or not.
Yeah, exactly. It's quick for us and it's quick for the seller as well. And the other thing, it saves on legal costs, because when the data room is already there, if that's just the links just provided to the lawyer can just go through that information, say, okay, we've got this, we've got this, we've got this, we've got this. Yeah, maybe we just need this. So instead of sending 100 emails and all those lawyer fees, they stack up. It's all there in that data room. They've got it there already, and maybe they just need 1 or 2 bits of information which are not there.
Yeah, and you know, for you to have that information up front, it makes you more committed to the deal. You know, so you know, unless you have everything, and it, you know, and inevitably, if you've got a client or you're dealing with somebody who hasn't done their due diligence and they've got to piecemeal bring that information onto the scene, it creates a time lag, doesn't it? You lose momentum. Yeah,
well, one thing I would advise any seller is that spend at least a month or 2 just looking at, you know, collating your documents. You know, spend that time collating those documents, and then once you've got that, then even when Zach, you know, you say, okay, I need those documents, it's there already. You just need to maybe scan them and upload them, maybe. And that just makes it a lot easier. But ideally, go digital. You know, I'm a big believer of you know, not wasting paper.